Hi everyone, Stats Trader is here. 5 steps on how to create and backtest your own trading strategy. So step number 1, make sure that your strategy is exploiting market insufficiency or exploiting people's emotions, such as fear or greed. Also can exploit brokers' insufficiency. For example, some brokers don't let people trade before market open and after market close. This creates a window of possibilities and different trading opportunities for you. For example, if people are holding their shares and they see that stock tanked 50-70% from the previous price, they can exit their position, and what happens is right after the market opens, you have this nice panic you can use for your advantage, buying this panic, for example. Step number 2, formulate your risk and your rewards, and make a clear statement, like what's your strategy is about. For example, if a stock drops 20% from its open price, what am I going to do? Am I going to dip buy it? Or am I going to short if it goes 200%? But it has to be very clear with very defined risk. Now, step number 3. This step is the most important one, and I can't stress how important it is in trading. So step number 3 is track your data and use your data to confirm your trading hypothesis. There are a lot of different tools that you can use to track your own data. I personally use Excel spreadsheets, and I track a lot of data. I have a lot of formulas. Basically, you use these data, you use the spreadsheets to confirm your hypothesis or to confirm your trade idea that you have. And once you have that, you create a clear edge by which you can beat the market. So step number 4 is start trading your strategy. Now, the trading size is a very relative thing for each trader, and my trading size might not be the best one for you. Your size must be determined before you enter the trade. And normally what I do, if let's say I created a strategy, I formulated my thesis, and I grabbed some data, I would start trading the strategy 1/5 of my normal size. So if my normal size is 2,000 shares per trade, now again, my normal size is determined by the stock price. So if stock is priced between $10 and $30 within this range, normally my size would be lower, because stocks that are priced higher, they can create a higher higher dollar range, but they also tend to create lower percentage range. This would be adjusted according to the stock price, and then of course things like market cap and float and stuff like that. So yeah, I would trade it 1/5 of my size, just so I can track my data in real time and define my risks. Why am I asking you to track it for at least 6 months? Well, there's this thing called market cycles. So as you guys probably noticed, most of you who had been trading for the last about a year or 2 years, you've noticed that the closer we get to Christmas time, the market is more active, and then again during the springtime and summertime, the market is pretty much dead. So 6 months period is usually enough to go through the slow market phase and the active market phase. And this is extremely important, because depending on these markets, you would also adjust your risk, and you would also adjust your size, because you must be more careful in a slow market. And why is that? In a very active market, let's say in winter, there's a lot of people that are jumping and trade, and they create a lot of percentage range. During the slow market, there's really no stocks that are moving. Stocks, they don't really create any range, and they don't really create any entry points for you. But the thing is, once everyone gets really bored, what they do, if there is a major play, let's say a stock goes parabolic 300%, I promise you everybody would want to jump into this trade. And just because people didn't have any opportunities during the slow market to size in and make some money or lose some money, because people really don't care about either they're losing or making money, they just want to be in the game. So what they do, they jump into this parabolic move, and what you have is a massive squeeze. You have a stock that goes from, let's say, $2 to $55. That buries a lot of people financially. And these kind of squeezes always happen in the slow market. So that's why you need to be extremely careful. After 6 months, you should have enough data to play with. Step number 5. Now this is the final step, and this step is actually, I would say it's never ending. Optimize your strategy. So if you've been tracking your data for about 6 months or a year and you've been trading it actively, you would notice some patterns. You would notice that different market caps, different floats, they perform differently. And also you'll see that on different market caps and different floats, you make more money or you lose more money. So what you really want to do is you want to break down your risk and your size accordingly. You don't risk as much on the plays that have the lowest winning percentage, the market caps and floats that don't bring you money or make you less money, or you have less of winning rate on these stocks, and you want to double or triple your size on setups that bring you the most money, or the setups that have the highest winning rate. So basically you want to go higher volume on these perfect setups, and you want to go like half volume or a third of volume on everything else. This is normally the sequence, the 5-step sequence that I use when I create a new strategy. And I've actually created a new strategy that I'm actively testing right now. And there's a few tools that you can use to track your data. If you want to go back in time, you can definitely do that. And there are websites to do it. I personally use finviz.com, or there's a website called spikeit.com where you can actually go back and see the data. In the next video, I'm actually going to cover some of these tools that I'm using to go back and see the data, because in reality, yes, you can track your data for 6 months, but you can also use one of these sites. You can go ahead and use them to see and find the edge for your new strategy. It's going to take a lot more time, but yeah, I'm definitely going to cover the spikeit.com. I'm going to make a tutorial on how to use it and how to use the free version of it. If you find this video useful, hit the like button and subscribe to my channel, and ask me any questions in the comment sections below. And see you guys next time.